Greetings from New York City. This is Chris Franco. Thank you for stopping by. If you are serious about trying to outperform the stock market over a long period of time, achieving results like Warren Buffett, then you need to take the concept of moats very seriously. That's what this video is all about. I put together a presentation synthesizing everything that I know that I think is worth knowing about this concept, and I'm excited to share it with you. What inspired this, though, was something that I came across in my reading just recently. So during the Graham and Dodd annual breakfast of 2022, the guest speaker was Todd Combs. Todd Combs is the one of the portfolio managers at Berkshire Hathaway, and he's also the CEO of Geico. Combs explained how one question is constantly asked, usually daily, and that is if the moat is wider or narrower on any of their businesses. Now, I knew this was something that was important, but I didn't know it was a question that came up every single day. So here's what we're going to cover, what you will get from this presentation. We're going to talk about what Warren Buffett says our primary goal should be as investors. You'll learn why Warren Buffett says that the key to investing is determining whether or not a business has a moat. We'll discuss two different models from biology that relate to this, the competitive exclusion principle and resource partitioning. We'll talk about how competition specifically impacts our investment returns and business performance, which is all tied together. I'll share the 5 sources of a competitive advantage. I'll offer a take on Tesla and what Tesla's going through right now and how having a moat or not having a moat is impacting that. We'll cover why moats are especially important for us as long-term investors. And if we have enough time at the end, I will offer or share my favorite way to gauge if a company's moat is durable or not. So without wasting any more time, let's get to it. First things first. In the 1996 letter to Berkshire Hathaway shareholders, Warren Buffett said that our goal should be to purchase a part interest in an easily understandable business whose earnings are virtually certain to be materially higher 5, 10, and 20 years from now. Now, keep this in mind, okay? Because everything is going to come back to this. If you don't already know this, and you might, prices will ultimately be determined by future earnings. And this is another quote from Buffett. So as one example, and I didn't go out of my way to cherry pick here, but this is NVIDIA over the last 10 years or so. And so you see on top there, that is NVIDIA's net income. And then below, you see NVIDIA's market cap. So there is a strong relationship that's also discussed in Robert Hagstrom's excellent book, The Warren Buffett Portfolio, and I've cited that on the podcast quite a few times. Charlie Munger, who, by the way, if you don't already know, Charlie Munger Quotes on Instagram is my Instagram page. So some of you have told me you didn't know that was me, but that is me. Charlie Munger says that frequently you'll look at a business having fabulous results. Tesla is a good example of this, by the way. You have to ask yourself, how long can this continue? And he says the only way he knows to answer is to think about why the results are occurring now and then try to figure out the forces that could cause those results to stop occurring. So you'll see here I did a very fancy graphic figuring out the forces. So what are the forces? The force we want to talk about, the most important one, is our competitive forces. I am a big fan of looking up the etymology of words. I don't know exactly why. I find a lot of truth in that, but I'm also just a nerd. So competition, though, is endeavoring to gain, refers to a rivalry. It's a contest for something, and especially in business. Now, we're taught competition is good, right? We're supposed to be competitors and have the competitive spirit. Now, Will Durant wrote a book. It's a very respected book called The Lessons of History. And in that, he says, we are subject to the processes and trials of evolution, to the struggle for existence, and the survival of the fittest to survive. The first biological lesson of history is that life is competition. So it's not just in business. Competition is all around us. So what I would encourage you to do, and something I try to do as much as I can, is, look around the world. I'm looking like, look at the world, amazing world. But if you pay attention to what's going on just around you in any given day, you can draw some of these lessons that we're going to go over together. And I think they'll stick more. And you'll start to have your own ideas and your own breakthroughs, which for me anyway, really helps with retention. A couple models I want to share with you. One is the competitive exclusion theory, or principle, I should say. And this means that competition between two species who are fighting for the same resources, well, they can't coexist. They can coexist, but it's just in a vacuum scenario, it doesn't work out very well. Competition's just, again, it's bad for business unless you're the dominant competitor. There's another model just to keep in mind here called resource partitioning. Something we can come back to. I don't want to get too deep into these models, but I was trying to relate it to the world around me because it helps me see the big picture and see if this concept agrees with reality. So let's get to the moats, right? I have not gone to medieval times since I think I was in middle school, but Warren Buffett loves talking about moats and knights and castles, but it is a good analogy. It's a little bit old school, but hey, I'm all for it. You see here, if you have a great castle, and imagine that castle's a business that is, doing something that's allowing them to just spit out money and stack it up to the ceiling. Well, people want to come and get in on it. They want to see, hey, look what they're doing over there. Let's see if we can, start our own version of that. And the moat is supposed to be this metaphor, I guess, let's call it analogy, for keeping your competitors at bay. Before they can get to you and start interfering with your cash producing machine, well, they're met with the moat. And that's something you want to have that not only is there and it's present, but it's actually expanding over time, which is not something you should expect from a lot of businesses. It's not the norm, but it's something that we should absolutely seek in all cases. Warren Buffett says the key to investing is determining the competitive advantage of any given company, and above all, the durability of that advantage. The products or services that have wide, sustainable moats around them are the ones that deliver rewards to investors. If you've seen some of my early stuff about Cathie Wood, one of my points or for bringing this quote into play is that, it's not about finding a hot industry that you can sort of surf behind, because, the way that a really popular industry, let's say like electric vehicles or the EV space, right now, Tesla and BYD and some other players are rising up, I should say. But in 10 years from now, can you really predict who's going to be the leader? You could, but it's very difficult to do with any sort of intellectual humility. I know, we all have that overconfidence where we want to say, Tesla or BYD, but, there could be another, it could be Ford. It could be a company we're not even thinking of. And that's the difficulty of these, or the stupidity, I should say, of buying these thematic ETFs. It's very attractive to our stupid brains. And I say that politely. I'm talking about my own brain as well. But at the end of the day, investing is about finding the companies that are going to win, because those are the ones that will deliver rewards to us as investors. Before we get any further, if you haven't, please like the video. I don't do a good enough job of asking people to do that. It takes 2 seconds to smash the like button, hit the subscribe, hit the bell. I'm really focused on just giving you as much value as I possibly can this year. And if you're looking for, sort of credibility or to see if I've lived up to that in the past, check out the CMQ Investing podcast. I have the links in the description. It was in the top 1% globally for most shared and most followed podcasts on Spotify across all categories. So I'm very proud of that. The content speaks for itself. And if you haven't checked it out before, I hope you will. But in the meantime, while you're here on YouTube, please subscribe. I really appreciate it. I was going through my research and things that I've compiled over the years, but there was a white paper I had that was produced by Morningstar, and it says that whenever a company develops a profitable product or service, it doesn't take long before competitive forces drive down its economic profits. And that's what I was alluding to. When you have something kind of good going on, competitors tend to look over and say, hey, what's Franco doing over there? It looks like they're making a lot of money. Could we do that? Yeah, we should do that. It's just, if you've been around business enough in life, you know that conversation is something that happens all the time. So to continue here, though, only companies with an economic moat are able to hold competitors at bay and generate economic profits over an extended period of time. And I want to make sure I point this out. An extended period of time, where it's going to come up again. So just remember that, extended period of time. The 5 sources of a sustainable competitive advantage. Now, you might have noticed in the intro, I didn't say sustainable, and I have a reason for that. But I'll go over these briefly. If you'd like me to do a video where I go into more depth on these sources of competitive advantage, or I should say of sustainable competitive advantage, let me know and I'm happy to do that. It just would have been really messy if I tried to kind of go off on like a dovetail on this while I'm still getting through the moat part. They are intangible assets. That could be like a brand name. Switching costs, how painful it is. How painful is it for the customer to leave you? Is it, I think of Apple a lot. It wouldn't be the end of the world, but like cognitively going when everything's on iCloud and I use all these different Apple services to have to go and, let's say migrate to Android. That's very unappealing. Network effect, which I believe no longer applies, by the way, and that could be another video, another one. Cost advantage, a company in that sense, Geico is an example of that. And efficient scale. I'm just kind of gleaning over the very high level of these. I don't mean to make this sound like these are all you need to know about this concept. But let's get into a company that we can look to right now and see how its lack of durable competitive advantage could be affecting its future. And that's Tesla. I'm not a Tesla hater. I'm not an Elon Musk hater. I'm also not a stan, to use the Eminem reference. So I think I can be fairly objective here, but I know it's a very polarizing topic. Tesla in December started really feeling the competition, or at least more so than I remember. And in China, for example, BYD actually outsold Tesla in the final month in December, that is, of 2022, which is a big deal. And that's actually caused Tesla to lower their prices to get more, have an increase in volume for their sales, which is, very notable. A couple other articles about this. BYD beats Tesla in 2022 EV sales as the world's #1 electric car seller, vindicated Warren Buffett's bet. It all kind of fits in together, right? It's like a nice little puzzle I put together here for you. Warren Buffett and Charlie Munger, thanks to Charlie Munger, invested in BYD, I believe, back in 2008, but don't hold me to that. But here's the question we have to ask ourselves when we're investing for the long term. If you are going to pick stocks, most of us should not be picking individual stocks. There's no evidence that supports us doing that. We tend to be terrible stock pickers. But the question really when we're investing is, will this business stand the test of time? And I don't mean like, will it be dead tomorrow? But the business that you are investing in currently, and let's say it's a dominant player and you feel like you have an ability to forecast its future earnings, future cash flows, that business has to stay somewhat the same. And I don't mean just the business, it can be the consumer behavior. There's other factors as well, but the world is constantly changing. We live in a dynamic world. Businesses, are also constantly changing. Humans are constantly changing. So we can't expect things to be exactly the same. But the companies that we want to buy individual shares of are ones that we can hold for a very long period of time, because then we take advantage of compounding as well as delaying those capital gains taxes, which allows us to compound more forcefully. These are not companies that are easy to find, and many people fail to do so. Ultimately, before you make that plunge, you need to say, do I believe that this future that I imagine for this company is actually reasonably predictable? And something that makes it almost guaranteed to not be reasonably predictable if there is going to be an onslaught of competition, because then everything changes. I wrote here, a sustainable competitive advantage, or we could say a durable competitive advantage or a moat, allows a business to produce predictable profits for an extended period of time. And that's what we're going for, predictable profits. Predictable, predictable, predictable. Mind you, the future is uncertain. We cannot predict anything with any sort of perfection or precision. What we can do is control the things that we can control. And if you're not investing in a business that is just saddled with competition, you can actually, make a guesstimate about its future value and how the company is going to see its, its cash flows evolve over time. So you need the moat though. The moat has to be there. If the moat's not there, you're doing it wrong. A moat assures us that the business is not going to change in a significant way. And Warren Buffett has spoken about this before. I mean, I'm not trying to claim that's like my original thought, although I understand it completely now. But let's look at some businesses that I believe have moats. Coca-Cola is kind of a gimme because Warren Buffett has talked about this quite a bit. Apple, I believe, has a durable competitive advantage. I don't know many companies trying to rush into the hardware business right now and, start selling smartphones and everything else that Apple sells. Costco, Coca-Cola, Warren Buffett has said, is the perfect business because it has a gigantic, durable competitive advantage or moat, which gives it, and here's that predictable word again, predictable cash flow. A couple other quotes here just to keep in mind. One competitor can ruin a business. And I'm not saying that Tesla's going to be ruined, but Tesla's ability to grow earnings the way that it has and just have the margins that it has right now, that's going to change because of competition. And I'm not saying it's ruined, as I mentioned, but something to keep in mind because it could happen. And that's why, trying to predict the future of a business like Tesla over the next 10 years is very difficult. But people are doing it. And Charlie Munger, echoing Warren Buffett, says you should always look for durable competitive advantage. I imagine there was an A there. Always look for a durable competitive advantage. By the way, this is not how I typically would present. I don't want anyone thinking this is like my best attempt at designing slides, but the substance is there. I hope you guys realize that. I'm very particular and I can be a perfectionist. But now finally, I want to leave us with this quote from Warren Buffett where he describes the best businesses. And that is businesses that do not require much capital and make good money. They've got some moat protecting them other than the capital required as entry in business that's protecting them. So, to get in the business, it's more than just the cost to get in the business. There's something else there that keeps them, that keeps competitors away. And if you can find those that are durable, meaning moats that are durable, you've got a great investment and one that will do the best in inflation, which, as we mentioned earlier, seems fairly likely to come along. And we know we're going through inflation right now. And this leads to my bonus point. One way that I like to gauge if a competitive advantage is real rather than go off something like this is pricing power. Tesla had to lower their prices. People can say, well, they did it because they have such great margins and they can, use that to push down on their competitors. But if they had a true moat they would be able to push down on competitors while keeping their prices where they are. And that's not a dig at Tesla, by the way. Please don't turn this into a holy war over Tesla, but that's something, to keep an eye on. Companies with pricing power, that really means a lot. It doesn't guarantee they have a competitive advantage. You should always use your brain and not just these rules of thumb, but, find an example. Maybe try to find an example of a company that can raise their prices, not lose any market share, that doesn't have a durable competitive advantage. But the bottom line here, folks, is moats matter. You have to, if you're going to pick individual stocks and you're not considering, the competitive advantage and the durability of that advantage, then you're doing it wrong. So I want everybody to do well. Be safe with how you invest. Do what's best for you. I'm never pushing anyone in one direction or the other, but this is a fundamental concept that we can all, do better, not just internalizing, but applying. And it's a fun way to look at the world around you. I'm a business owner myself, and just these conversations, even if I don't go out and buy a bunch of new stocks tomorrow, it enhances the way that I think about my own business. So I hope you got something valuable from this. Please leave a comment if you did, if you have any other questions, if you want me to make a video about something related to this. And I appreciate you all for watching. Please like the video, please subscribe, and share it with a friend. All right, for CMQ Investing, my name is Chris Franco. We'll talk soon. Later.